Here's a quick concept check on the price cycle, also known as the Wyckoff price cycle. When an asset that we desire goes on sale and prices drop, it'll get to a point where people start to think it's a really good deal. And prices have dropped because you had a lot of supply coming in. And so as it gets oversold, that's just a way of saying that people like the value of it at that price after the price has dropped. And it goes through a period of accumulation where people buy a bunch of it. And they buy up the available inventory. And then if the demand remains, prices will continue to rise. And that's called the markup phase. And then as prices get marked up, eventually they hit a price point where the price is too high for the current perceived value. And you'll see a stage of distribution, a fancy word for selling. And that causes the price to then go down. You see a markdown as supply comes in. So it's a cycle that repeats over and over again. And in a sideways trend, you'll see that cycle repeat, and price thresholds will get established, and people will remember those price points, and then the cycle has a tendency to repeat. And those oversold, when we see the accumulation, that creates support. And when it's overbought, we see distribution, that creates resistance. And the cycle does repeat. And when you look at that on a candle chart, you'll see that it looks a little something like this. That would be a short-term candle cycle. Prices run up, candles shrink, then they come down, candles shrink. You see the price oscillate, and you can see that, on bigger cycles here. So if we were to take this out and quickly show you a live chart of General Motors, you can see the price cycle, and I just picked this stock out of a hat. You can see the price cycle here, where you see it hit kind of a resistance point out near 40 after an accumulation phase. Prices come down into a distribution phase, selling markdown, got down towards 32 and 33 ballpark, and people remembered that, and prices went back up, got up towards the top of the range. And you saw some distribution come in, and this time it just didn't dip as far. It came down and found some demand at a higher price, but the cycle overall repeated. Each time it got out towards that ballpark near 40, that created supply. People were selling, and so the cycle then drops back down towards 33, and prices start to go back up. So you can see that accumulation and distribution cycle. And once you're aware of the cycle and you're able to identify that general pattern, and you learn how to use the candlestick